Hello, everybody. How is it going today? So, today we're going to be talking about how to read charts, and welcome to lesson number 8. We're going to be talking about how to read charts, analyze candlesticks, and reading price action. So, by the time you're done this class, you should have a very firm grasp on what are all these charts? What's all this information going on with all these charts? What do these candles actually mean? What is actually price action? I'm sure that you guys have been very overwhelmed before if you have not been exposed to learning how to read charts before. And these candlesticks, guys, they really do tell a story. So let's recap everything that we've learned thus far from lessons 1 to 7 very briefly. So I hope you guys have had a fantastic day trading so far, and I am so excited to be doing this new lesson number 8 with you guys, and thank you very much for tuning in. So in the very first class, you guys should be able to speak the lingo with me now, right? We've talked about the common terminologies. In lesson number 2, we talked about how to deal with your emotions, how to naturally progress by losing quite often, what is risk management as well, and how we try to make sure that we increase our probability so we can trade like a casino and we focus on taking high probability setups that yield high rewards with very little risk. In lesson number 3, we talked about dollar cost averaging. What is dollar cost averaging and what is laddering your buys? Laddering your buys is the process of slowly buying on the dips as it gets lower and lower. This way, you can average out the cost of your position. This way, you're not actually trapped in one particular situation only. What is the level 2? That was lesson number 4. Reading the level 2 is a crucial part of understanding quick and real time momentum changes. We have to understand what the bids are. We have to understand what the asks are as well. It's only until we know how to read the level 2 order book that's when we'll have a very firm grasp on what exactly is going on in the order book. We also get a chance to spot walls. Whenever we see these walls, some people call it manipulation. A lot of people also call it strategy. We have to keep in mind that trading is one big strategy game, right? And because it's a very big strategy game, there's always people trying to block each other. And then lesson number 5, we covered what is going long, what is going short, what is margin trading, what is leveraging, what are the risks associated with it. Now, in lesson number 6, we talked about why do we need charts, right? Why do we need charts and why is it important? We talked about how to customize trading view as well. And in lesson number 7, which was just the previous lesson, we talked about what are technical indicators? What is a technical analyst? How are they actually used? How are these indicators used? How do we differ from a technical analyst and a fundamental analyst? What are some of the philosophies associated with being a technical analyst rather than investing from a fundamental level? So guys, let's get right into this, okay? I'm very excited to be talking to you guys about how to read charts. We're going to learn how to analyze candlesticks. We're going to learn how to read price action. So thank you very much once again for joining me for this lesson number 8. Okay, let's jump right into this tutorial. As you guys have probably customized already, this is how my screen normally looks like. I've got 6 charts here on my large 32-inch monitor. It's not a 4K monitor because I don't need a 4K monitor, right? A 1080p monitor does the job perfectly fine, and it's actually all that I need. Some people prefer to have a 4K monitor. You guys have seen my setup before, right? I have two 32-inch monitors, and let me just show you guys my setup if you've never seen it before. So this right here is the setup that I use on a day-to-day basis. I've got two 32-inch monitors there. I've got a really cool Corsair mouse and keyboard combo. Lots of messy cables, but it's actually all cleaned up now. I've got a really cool monster rig here. I really enjoy my LED displays that you guys see here, right? Beautiful displays here with RGB lighting. I've got a nice 1060 video card, all water cooled as well. Yeah, it's a cool setup. It really is definitely a really cool setup here. So but the main thing to notice is that this is my monitor setup right here. Okay, guys, this screen that you guys are looking at is right here, and this is where my web camera is. I've got a SteelSeries headset, RGB lighting, keyboard, and mouse as well, and this is the monitor that you guys always see. But normally I actually have 6 setups on here. So make sure that you guys are customizing your view as well to however you prefer them. And I also have a tablet that I'm always keeping on my keyboard or by my keyboard. I've got a cell phone as well, actually two cell phones. Both of them have my 2FA on it that don't touch the internet at all. So yeah, I just want to show you guys my quick setup. Make sure you guys are customizing your setup as well. Make sure you're investing in a really good chair because you're going to be sitting down on it all day, right? So let's talk about candlesticks, guys. Let's talk about candlesticks and what this means. So we're going to go over it from the very, very, very beginning. I'm just going to assume that you guys don't know nothing at all, okay? So we have a candle that's like this, right? As you guys all know, that is basically a candle, okay? This is what we call the body. Now, you guys will always see stuff like this, right? The O, the H, the L, and the C. Okay, I'm just going to write it down. This is the O, which stands for open. Okay, the H refers to the high, the L refers to the low, and the C refers to the close. Okay, so what is the open? So let's say this is a green candle. There are two different types of candles. Okay, there's a green candle and there's basically a red candle, right? Just like this over here. And I'm going to draw this red so it makes it very familiar. The reason why we need to make sure that we understand how to read these candles very well is because these candles tell a story. They tell us throughout the day, and it's called price action, okay? The price action will show us what is happening throughout the day. And after it's happened already, these candles will form. Now, it's really important because they really do tell a story. And once you learn how to read this story, it really does become like a book. And once you learn how to read this book, it will actually increase your probability of leaning towards a specific way or another way. And once you get these probabilities down, guys, you guys are going to be much, much, much more successful over time. I guarantee it. So make sure that you're putting a lot of emphasis in learning how to read these candles because I want to ensure that you guys are successful traders. I really do want to ensure that you guys know how to read this properly because it will only add to the probability of having a higher success rate when you're actually trading, okay? So as you guys can see here, we have the open. So what the open refers to is this right here. And I'm going to annotate it all for you guys. The open is right here, okay? This is where the candle opened. So just as an example, I'll move this to the side actually so we can deal with the red candle in a little bit. So this is the open. Let's say that this was $10, okay? We're just going to hypothetical. Okay, this line right here that it's on, right there. This specific line right here, that is $10, right? So now, what would the close refer to? What do you guys think? Actually, sorry, this would be the open. My mistake there, guys, okay? This is actually the open right here. I was thinking we were at a red candle. So this is the open where it starts to open up the candle at $10. So what do you guys think the close would be? Let's just pretend here that this is $11, okay? Right here is $11. Do you guys think that this would be the close? Yeah, it would be the close, okay? So if that was $10 here, we'll just pretend that this one here closed at $11, okay? Just like that. So this is the open because we have to think about it from the ground up, right? We have to think about it from this particular way up right here, okay? Going upwards like that, right? Does that make sense? So we think about it from the perspective of going down to up because it is green. So let's take a look at this one right here. Okay, let's take a look at the red one. So because the red one is actually going from up to down, we would actually think about it from the other way. Okay, let's just move this a little bit over so you guys can get a very clear picture of what's going on right now. I don't want to constrain you guys with too little room here. So I hope this makes sense where because it's green, you're thinking about it from going down to up, right? Now, if we look at it from the other perspective of a red candle, right, we would think about it from the perspective of going up to down. So the open would actually be up here, okay? This would be the open, and this right here would be the close of the candle. So this is an important concept because you guys will hear very often about traders talking about, okay, what did the candle open at? And a lot of the times, if a candle actually ends up opening higher than the previous candle on a high time frame, then it could indicate the momentum that's heading and where it's heading. So if this one here was the open at $11 rather, okay, then where do you guys think the close would be? Yeah, if you guys said this was the close at $10 right here, okay? So yeah, this would be the close at $10. So once again, when we have a candle, right, that opens at $10 and it closes at $11, it means that it went from the bottom to the top. Now, if you have a candle that is red and it was actually downtrending, then you would see it the open at $11 and the close is at $10. But because these candles have no wick, what we're also going to say is that the high is also the same as the actual open, okay? So the high is also $11, right? That's the high, the highest that this possible candle actually got, okay? Now, what do you guys think the low is? Yeah, if you guys said the low was $10, you got it, okay? So the low is also $10. So for this one right here, what do you guys think the high is? Take a guess. Yeah, if you said the high was also $11, you got it. What do you think the low is? If you guys said low was $10, you got it. Okay? So pretty easy concepts, right? Now, okay, so I've changed it over to a daily chart now, and I just want to reiterate one more time to be very clear, okay? It opened here because this was a green candle. It goes from the bottom to the top, right? That makes sense? Goes from the bottom here to the top because we're going from low to high, right? So the low is $10 and it opened at $10 as well, okay? Now the high is $11 and it's also the same as the close as well, right? And then the other way around, we're going from up to down because this is where we're starting the opening price. So this is actually a downtrend, right? So for example, this green candle is going from down to up, and this candle is going from up to down, right? So then the open is at $11, and that was also the high of that candle. And then the low is it reached to a low of $10, right? Which also closed at $10 as well. So now let's introduce this concept of a wick, okay? Let's talk about wicks. And I'm sure that you guys have seen wicks before. So you guys see these wicks, right? We always see wicks, as you guys can see. What does a wick refer to, okay? A wick refers to this right here. I'm going to show you guys. Let's actually draw in some wicks in here. Okay, do you guys see the white right there? That's a white wick, all right? Let's actually clear out the background so you guys can see it a little bit better here, okay? Let's take out the vertical lines. We don't really need them, right? We definitely don't need them whatsoever. So let's just take that out here for a moment so you guys can see it a little bit more visible. And let's also make a wick on the other side as well, okay? Let's make a wick there. Let's also make a wick here. And let's also make a wick right there to make it easy for you guys to see. Okay. Let's draw some nice candles in here as well. That's pretty visible, guys? Yeah, it should be, right? Okay. So now we have the same concept, right? The exact same concept where we're going from down to up, okay? So once again, this right here just refers to the body, okay? Body of the candle, known as just the body, okay? That's the body of the candle, and this is just the body of the candle in here. So the body does not actually refer to the wicks at all. So what are these wicks and how can we talk about them, okay? So now we're still going from down to up, but the only thing that changed was that there was a wick, okay? So let's just say, for example, that we say that it's still open at $10. Let's just say there's no wick for now, just as an example, first of all, okay? There's only a wick up here at the top and not one at the bottom. Well, the high, where do you guys think the high is now that we have a wick? Well, the high is actually up here now, right? So perhaps this high was of $12, right? So the high is where the highest point of the wick actually where it got to. So now this is the high of the candle because that's where the wick is, right? That makes sense, guys? So this top point right there is the high of the candle. So we still see it as the exact same way where it opened at $10, right? And then it got to a high of $12 and then it closed over here at $11. Now you might wonder what would cause a wick, okay? What would cause a wick? So the body of the candle is only the solid part of the candle that people will start buying, and if it closes with a body of a candle only, that's where it officially closed and people stop buying at that candle. But what this wick actually refers to is that people bought, they opened at $10 and people bought up to $11, right? And then they actually bought all the way up to $12, okay? They bought all the way up to $12 right there, but they actually couldn't sustain that price. So if this actually pushed up to $12 and it closed there, then this one would have a close of $12 as well, okay? But because people pushed it up to $12 and then they could not sustain that price, well, people started selling off, right? Because they started selling off, selling off, selling off, selling off, selling off, selling off. And then it came back to the price of $11, right? So what we say is that it got up to the high of this candle right here, or the wick rather, of $12, and then people started selling it down. Okay, they started selling it down, and instead of closing at $12 up there, the close was actually at $11 instead. Now let's introduce another concept of a wick down here, okay? And we see that often. Do you guys see this candle right here? It has a wick on the downside, right? And it has a wick on the upside, and it has the body of the candle right here as well, right? Okay, I'm sure you guys do see that. So let's talk about what happened here. So the open of the candle is always where the body begins, okay? And the high of the candle is always, or sorry, the close of the candle is always where the body ends, right? And the high of the candle, of the whole thing, refers to the how high that entire candle got, including the wick. And then the low will mean the exact same thing then, right? It'll mean that what is the lowest point of the candle that it actually got to, of the whole thing, including the wick? Well, it's still opened here, right? Let's say that this low actually got to $9 instead, okay? So what could have happened, right? What could have happened to make the low right there, the lowest point of the candle, $9, where it opens at $10 and it pushes up to there, but it still closes 11. So let's think about that for a moment. I'm going to give you guys a few seconds to think about what kind of scenarios do you think that would make a wick on the bottom end like this? Can you guys come up with any good ideas? I can come up with a few good ideas I can share, that's for sure. All right, so what could happen here is this. Let me show you guys and tell you. So let's say it opened at $10, right? The candle, in the next candle that formed, this is where the first price and the people interacting with the market actually ended up buying it. So they first bought it at $10, right? But what it could actually mean is that people could have sold off, okay? It could have sold off to $9 first of all, right? People could have sold off to $9. If they did sell off to $9 first, right? This would actually look like a red candle, like that, down, right? So people sold off, okay? they sold off to $9 where it's actually going to look red like this first. And I'm actually going to go through all the motions to make sure you guys understand. So it would have been red like that at first, and it actually would have had no wick. So it would have opened at $10 and reached a low of $9. But because it didn't actually sustain that price, the market pushed it back up like this, okay? They pushed it back up, back to the original opening, and then instead of being red, remember that if it's red, it means that the price is going down. If it's green, the price is going up, like that, right? So red will go down, right? Green will go up. So red right here, for example, right? If it opened right here at 11, red will mean that it's pushing it down like that, right? To the close. So it opened here, and now it's about to close right there, okay? And then if it's going up, this is where the open is, and then we're going up, 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 right? People are buying it up. But if it goes down, the price goes down, it'll move down like that. So what this refers to is that people are actually buying right there, guys, right? They're buying it. Well, first of all, once again, people were selling it off to $9. Opened at $10, people sold it off to 9, but the market defended. And because they defended and they pushed it back up, there's now a wick, right? There's now an actual wick. So then the market pushes it up and up and up and up all the way to $12, right? To $12. That's where they're at. But because the market could not sustain it at that particular price, then what they do is the market pushes it back down like that. And that's why we could actually have a wick, okay? So I hope that makes a lot of sense. You guys are going to hear me talk about it a lot in the next few videos, right? And I will be talking about the market psychology behind each candle as well, because the psychology behind each candle is incredibly important since they actually tell a story, right? And because they tell a story, I definitely can guarantee that once you guys learn how to read these story books, it's going to increase the probability of you making a successful trade. And if you actually increase the probability of making a successful trade, well, guess what, guys? You're going to be profitable over time, right? And the money will actually start to roll in. So now let's look at the red candle, okay? Let's look at the red candle here, right? And let's just say that it opened at $10. So it first of all started right there, okay? Started right there. And then the market wanted, and that's also the high, right? Because this is the high at $11, and it also opened at that price. So then the market decides to sell down, decides to sell it down, 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 right? If it actually, oops, my mistake. If it actually closed right here, right? Then we would say that the low is the same as the close, right? Right there. But let's just say, for example, that it actually got to $9, okay? $9 right here, all the way down to over here, right? All right. So let's say that this low was actually $9, right? Down over here, right? So what would possess it to do? So think of it like this with me, okay? I'm just going to hold up my hand here to give you guys a good idea. So we're going to sell it down. We're going to sell it down. Whoops, my mistake. Okay, we're going to keep selling it down, okay? It's going to keep selling down, selling down, selling down, selling down, okay? Selling down. I'm not sure why this is looking like that right now. It's kind of weird. There, that might be a little bit better now, okay? Sorry about that, guys. So now we're selling it down, selling it down, selling it down, selling it down. And it actually got to $9 right here, okay? It got to $9 right here. And now if it actually closed there, right? If it actually closed right here, then the close and the low would actually be $9, right? But because they actually could not sustain it, right? The market pushes it back up, okay? And as the market pushes it back up to $10 right here, a wick actually ends up showing just like that, right? So instead of actually closing at $9, you now close at $10. So the psychology behind this candle, as an example, is that the market tried to push it really hard to $9, right? And keep it there. But the bulls actually ended up defending, okay? The bulls, who are the people that actually want to profit by going long. I'm always going to use bulls and bears quite often, so make sure we're familiar with these terminologies. Remember that a bull attacks going upwards, right? They attack with their horns going up. So they want the price to go up to make money. But bears, they want the price to go down because they either want to short the market or they want to buy back cheaper, right? So bears swipe with their claws coming down. So we always think of the battles of the bulls versus the bears, and they're constantly fighting each other back and forth, back and forth. So right here, the bulls have defended and they pushed it back up, right? And then we actually see the wick. So the low was now $9, right? And now the close was $10. So let's also add another scenario like this, okay? We'll add this one right up there, just as an example. We have a wick. So what would this possibly mean? I'll give you guys a few seconds to think about what this scenario could actually mean, okay? So let's think about this together, where we now have a high of $12, okay, an open of $11, a close of $10, and a low of $9. I'll give you guys 30 seconds while I have a sip of my peach mango drink right here to think about what circumstance could we actually have that right there. All right, let's get into this, guys. So let's say that we opened at $10 or sorry, $11 right here, right? So what could have happened in this candle is that the bulls, okay, we opened right here, and this would actually, first of all, it would have been a green candle, right? Because we're going up. So the open would have been $11, right? If it had finished there, then the close would have been $12. But because the bulls could not sustain it, okay, it gets green, it gets green, it gets green, it's green, it's green, it's green, it's green. Now the bears actually push it back down. Then when it gets past the point that it actually opened, that is where the candle will actually start to turn red. Okay? So that's what happened. It was green, green, green at first, right? The bulls tried to push it up really high there, but the bears actually pushed it all the way back down. So anywhere there's a fight between the bulls and the bears, that is where it is actually going to show a wick, okay? It's going to show a wick. And then the bears end up pushing it down again, pushing it down, right? And they push it down all the way to over here, right? And because they push it down here, but the bears could not hold their position, then the bulls actually end up pushing it all the way back up like that, okay? They push it all the way back up just like that. That makes a lot of sense, I would imagine, right, guys? So once again, the bulls, they are pushing it all the way up, right? Okay, they push it all the way up just like that, but they actually could not hold their ground. And because they couldn't hold their ground, the bears actually pushed it back down, and that's why there's a long wick. Then the bears, they keep driving it down. The bears keep driving it down. They drive it down more. They drive it down even more, right? Then they push it to all the way to $9. But the bulls actually end up defending and they push it back up. That is why there's a wick. So let me ask you guys this now, okay? What if this wick was really long, okay? Let's say this wick was really long and this actually got all the way to $7, we'll say, okay? What do you guys think that this would mean if there was a really long wick at $7, okay? What do you guys think that that means? Let's say we're on a downtrend, okay? We're on a downtrend, and then we see this candle. Okay, actually, let me ask you guys two things, okay? Let's say we're on a downtrend, and one candle was green like this, okay? right? Let's say one candle was green like this, and they both got to $7 like that. What do you think the difference between these two candles are, where one is green and one is red, but they both have a very long wick? Can anyone guess what it means? I'll give you guys time. Really, really think about this, okay? I want to give you guys a clue. First of all, you have to think of $3 where the Bulls ended up fighting back against the Bears and defended their position. So what do you guys think that this could actually mean? Okay, let's get into it because I love talking about this, okay? What it means, okay? We'll talk about the red one first, okay? The red one opened here, okay? The red one open, it could mean many things first of all, okay? Let's talk about all the different scenarios, okay? So it opened there, for example, right? It opened there, and the first thing that could have happened was this, okay? The first thing that could have happened is that it pushed all the way back up, like we were talking about, right? It pushed all the way, the Bulls actually pushed all the way up here first, right? Where this was green at first, right? But the Bears ended up defending and they pushed it all the way down, all the way down, all the way down, all the way down, all the way down to $7. But now the Bears and the people who are interested in the coin at this price, they're like, no, at $7, we're actually going to hold our ground. And we want to buy it back up. We don't want to let it get past $7. So now the Bulls step in and they're like, okay, we're pushing it up. We're pushing it up. We're pushing it up. We're pushing it all the way back up to $10. Okay? So that's what it means. It means that the range from $7 to $10, there was really strong support. Okay, guys? There was really, really strong support. That's what it basically means. Okay? That it's not getting below that. So we call this a bull wick. Okay? A bull wick, like Bull, like the animal, a bull wick, because this refers to a really large price in rejection where the Bears simply could not hold it at that price. So the Bulls actually end up defending that $3 range with a really long wick. And guys, what we look for is we look for wicks, okay? We look for wicks because wicks will give us the best indication of what we can actually do in terms of the ranges of defense and where these supports are. So if we get a lot of support in these particular regions, we're going to be able to find clues of where to actually go long. Okay? So that's a very exciting concept. Okay, so we call this a bullwhip, right, guys? A bullwhip is what we want to hunt for. Okay, now let's talk about the green candle versus the red candle, okay? Every time I say candle, it reminds me of my friend Maria. Maria, I miss talking to you if you're watching these videos. You should really, really get back in touch with me. She got really too busy. She got much too busy recently with school and everything, so we kind of lost touch. But every time I say the word candle, it just reminds me of her accent. It was kind of adorable. So, yeah. Anyways, sorry about the segue there in a little bit. I hope you guys don't mind my small little anecdotes here and there and so on. Okay, so let's talk about the difference between the red candle and the green candle. Okay, so let's talk about this right now. So the actually we didn't even finish this one, right? So we talked about this first right here, okay? Where we talked about it going high up and then the Bears simply pushed it down here. And then the Bulls defended it to make it come back up. So we have a red candle, keep in mind, right? It's a red candle, regardless of how you see it. So the other way is it could actually have gone down first, right? It could have gone down first like that, down first, right? And then the Bulls actually defended it. The Bulls defended it, pushed it all the way back up, pushed it all the way back up, like that, right? And then what ended up happening was the Bears actually pushed it all the way back down. So you can see more of a struggle when it actually comes to the red candle, right? red candle, it's super bearish compared to what we're just about to talk about here, okay? So let's say we take a look at this one now, right? So this one could have happened like this, right? Now, what we want to see is the first way, first of all, is that the bulls attempted to push it up, right? It opened up here at $11, right? Or sorry, it opened here on the bottom, right? Opened here. And then what ended up happening was the bulls pushed it up first, pushed it up, right? Pushed it up like that, right? They pushed it up like that, but then it came all the way back down here first to a low of $7, right? Like that. Actually, I shouldn't be talking about it from that perspective. My apologies, okay? I should be talking about it from this one right here. Let's backtrack just a second. And now it opened here, and then the bulls pushed it all the way up, pushed it all the way up, pushed it all the way up, right? But they couldn't hold their ground, right? So it ended up getting pushed all the way back down to over here, right? Which created a massive bullwhip. So the bears are actually trying to push it down, but the bulls are simply too strong in this candle, right? And then they pushed it all the way back up to right here. So you can see the difference between how strong this one is. And now the other way is that it opened here, right? It opened right here. And then the bears tried to push it down first, okay? But the bulls are like, nah, we're not having any of that right now. We're not having any of that. So then the bulls pushed it all the way back up, all the way back up, all the way back up to even where it's $12, right? And then some of the bears, they took profit or whatever, then they pushed it down and it just steadied right there. So that's an even more powerful indication. So we have to think of the differences between these two candles, right? The green one is obviously a lot more bullish and the red one is a lot more bearish. And what we want on a downtrend is a really big green candle, right? Now, a red one can still be a bullish candle, but of course, a green one will give you a much better of a bullish better chances of it being seen as a harder support. So I hope that this has cleared up a lot of the definitions between open, close, high, and low. So now let's move into even more formations and give you guys crystal clear examples of what we see in a typical day, all right? All right, guys, let's get into some candlestick formations and let's talk about a lot of these different types of candles right here, okay? Let's first of all talk about the hammer candle, okay? We're going to go over every single one of these candle formations and they're going to be in high detail. So let's talk about the hammer candle right here, okay? So a hammer candle is green like this, preferably better green than red, as we've talked about earlier before. So the hammer has a fairly decent size wick, just like that, right? So this is called a hammer candle. And this chart right here, guys, is available to download. Just look below. It's going to be a part of the resources where you can access and make sure that you guys are saving this particular chart right here. So the hammer candle implies this, okay? That the bears attempted to push well below, okay, well below, but the bulls actually defended it very successfully, pushing it all the way back up. So it opened right here and it closed right there. So at the beginning, what happened was the bears tried to defend, or they tried to push it down, but the bulls defended it, pushing it all the way back up, hence the hammer. Now the next one is called the inverted hammer candle, okay? The inverted hammer is the opposite, like that, where it's an upside down candle. But this is still a very bullish candle. And the reason why it's bullish is because, well, the bulls are actually attempting to push it up regardless, right? And because they didn't get it that high, but nevertheless, it's still bullish because they are attempting to push it up. Now, this right here is called a dragonfly doji. This one right here. This dragonfly doji has a very small body, okay? A super small body just like this. Now this one here, it could be even smaller like that, right? This one is pretty much the exact same terminology where the bears tried to push it down, but the bulls defended and they pushed it back up. So if you ever see these at the bottom of a downtrend, these are very bullish candles, and it would actually imply that there's a good chance that something is going to happen in terms of the bulls defending successfully, and we should get higher highs. Now, the next one we're going to talk about is the bullish spinning top. Okay, the bullish spinning top has basically like that, where the body of the candle is pretty much right in the middle, just like that, okay? It's got wicks on the upside and it's got wicks on the downside. So these are incredibly powerful candles as well, okay? And then we also have, I'm just going to go over the very common ones that I think are very important to understand, right? So let's say you had a red candle, right, where you're coming down, okay? Let's say you got a red candle coming down just like this. So you got like a series of red candles like that, right? So let's just say you got like two candles, right? And this one's a small one. And let's say the next one here is a really large candle, okay? A large green candle that's much bigger than the previous red candle. This one is called the bullish engulfing candle. And the reason why it's called an engulfing candle is because it's eating up the previous candle, right? Think of it as a much bigger candle that's actually just devouring it. So that's how I see it. And then you got another combination of a candle called the tweezer bottoms, okay? Tweezer bottoms is exactly as the name implies. It looks like tweezers, right? It's got two little wicks like that that actually look like tweezers. And if you guys see these two little wicks right here, right, that will actually imply that the tweezer bottom, it's showing some sort of rejection to the downside. And that's what I personally love to see quite often, okay? So if you guys ever see these kinds of candles, they're incredibly important for you guys to recognize the signs of a possible reversal coming up very soon. So let's talk about some bearish candles now, right? Let's say we got like, some bearish candles like that where it's just or sorry, we should make that green, not red. Okay, let's make this green. Okay, where we're just getting a series of green candles like that. It's still on an uptrend. Well, let's talk about some of these candles like a hanging man, all right? This is a hanging man right there. Make sure you guys are downloading this to add to your learning. So let's say that you actually get a candle like this, okay? Where this one is now red or green, one or the other. Regardless, it's still seen as very bearish. Now, the psychology behind it is this right here, okay? The psychology behind it is that the uptrend is almost over and the bulls are actually losing their steam. And the reason they're losing their steam is because the bears are starting to take profit. They're trying to actually drive down the price of the market, right? That's why you're seeing this really larger wick right here as well. And some other bearish candles is the bearish spinning top. It's kind of the opposite of the bullish spinning top where you get a body that's right in the center, and you have a wick that's equal length on the top and on the bottom, right? So that's called a bearish spinning top. It might look something like that, a little bit bigger. If you got something that's very small, like this right here, for example, this is called a doji, right? Small little wicks, small little body. So this would be called a a bearish doji candle, or just a doji in general. Now, this one right here is the most powerful reversal candle that I'm just about to show you guys. So please remember this one. This one right here is called the shooting star, okay? The shooting star looks something like that, right? A shooting star is a candle with a really long wick to the upside, okay? With a really long wick to the upside, which is very implicative that the bulls have tried very hard to push it all the way up, but they actually couldn't push it all the way up. And instead, the bears ended up pushing it all the way back down. Now, another combination of a candle is, for example, a tweezer top. So the tweezer top is exactly like the tweezer bottom, except now we're seeing it on the top end reversed, where we're seeing kind of formations like that. And the best thing to do is just to actually get right into the candles and take a look at tons of examples that we're going to find in these charts together. So let's remember the significance of these candles, okay? The significance of these candles is that when we find them in specific places, in specific positions on a chart, it might actually indicate the momentum of what is happening. So if you see a lot of wicks going to the downside when you're already on the way down, it might indicate supports because they're trying to push it down, but the bulls are actually defending and push it up. Let's say you're going on an uptrend, right? If you see a lot of wicks, right, on an uptrend, a lot of wicks to the upside, it might also indicate that, hey, it might not actually be the best time to go long because we're getting rejections. So just to give you guys a basic idea of what different time frames is you have to remember what time frames are. Okay, guys, we're gonna go over time frames in the next lesson, actually, in lesson number 9, how to read how to interpret time frames by looking at the little picture and also the big picture as well. But just to give you guys a quick introduction, right? If you take a look at the daily time frame, and you also see 4-hour time frames as well. Well, guess how many 4-hour candles will actually make up a daily candle? It would be 6, right? Because it takes 6 4-hour candles to make up a single daily candle, right? That makes sense? So the way that we look at time frames is it's a way for us to get a gauge of what's happening in the big picture and also in the little picture as well. And overall, we try to do this because we want to get an overall picture of everything that's happening on a micro level and on a macro level as well. So let's just go over some candles that we see that might indicate, just as an example, okay? So if you guys see right here, right, this is a downtrend, this is a downtrend, this is a downtrend. So what people were waiting for was basically a candle that was going to be bullish. And this ended up forming on the daily candle right here. It ended up forming a bullish spinning top. Think of a bullish spinning top like a rolling pin, right? A rolling pin. So then that signaled to the market right there that, hey, this might actually be the bottom right there. So let's look at it on an uptrend, right? These two candles right here made a tweezer top, right? Take a look at it. It's got those two little wicks that are poking to the top there. And then you get this candle here called the bearish engulfing candle, right? So on an uptrend, when you get the bearish engulfing candle, it's very indicative and very powerful that we're going to pretty much be done the uptrend. So let's take a look at some of these. This one here, we're starting to get a lot of wicks, right? Tons of wicks to the upside, tons of wicks to the upside. And because we're seeing a lot, oh, sorry about that. Because we're seeing a lot of wicks to the upside, what ends up happening is it usually signals to the market that, hey, are we actually done this particular uptrend right now? So it might actually be time for you guys to take profit. So here are more so indecision candles, right? Sometimes when we see large ranges, like this range in that one day went from 9,000 all the way to 11,400. These are more so indecision candles, okay? Now, let's say we're looking at this candle. What we're seeing is a hanging man candle. So the hanging man candle signals to the next day that, hey, this is it, guys. Like this is definitely it right here. We're not going to get any higher highs. We're most likely just going to end up trending very much so downwards. And this candle right here, guys, this is the shooting star, but it kind of looks like a bearish a bearish spinning top, and it kind of also looks like a doji candle, right? A bearish doji candle. So when we saw this right here on December 17th, it was actually signaling to the market that there's no way we're going to get any higher than that, right? That's why we ended up dropping almost $20,000 there in a few days, which was actually really scary. So then, and it was also really indicative because the next day as well, you were getting a doji near the very top. So it signaled to the market, hey, might actually end up coming down. So on the downside, we actually see a lot of wicks right here, right? So because we're seeing tons of wicks on the downside right here, it actually shows that it's rejecting to the downside. And because it's rejecting to the downside, it eventually went back up for a little bit, right? And then we got this bearish spinning top here at the top. And this bearish spinning top signaled to the market that, hey, it's actually time for us to take some profit. These long wicks to the upside is basically a battle between the bears and the bulls. And clearly, the bulls ended up losing. So the bulls attempted to push it up very high, but they just couldn't hold it, right? And because they couldn't hold it, it just ends up coming downwards. So what we try to do, guys, is we try to find confluence, right? What confluence lets you do is it lets you find reasons from a price action analysis, and you combine it with other indicators such as RSI, such as MACD, such as tons of other indicators that might give us more of a reason and a higher probability that it might actually lean one way a lot more than the other way. So that's why we're trying to evaluate these candlesticks right here, right? So let's just keep going, right? Let's just keep going. For example, February 6th, right? We got this gigantic hammer candle. The hammer didn't really hold there because it didn't have a lot of volume. So what you want to make sure that you have a lot of as well on a downtrend is a lot of volume, guys, okay? It's really important to have a lot of volume. If you get a lot of volume, you're going to be able to confirm that the market is generally interested in sustaining it at that price and supporting it. So after we got this candle, for example, a hammer candle, when this daily candle formed, it would have been very wise, guys, to enter a position. And you would have entered perhaps when this candle closed right there. It opened there, it closed there. The next day, you would have entered your position. You would have set your stop loss slightly below, okay? You set your stop loss slightly below, and then you target at least the previous high, roughly, right? The interim high right up there. So then you would have had a beautiful risk to reward of about 2.0, we can say, okay, 2.0 for a possible 48% gain, for a possible 23% loss. That's definitely a very good risk to reward. Now, keeping it to candlestick analysis only, if you guys actually take a look at this massive candle that formed, do you guys remember the name of this candle right here? Look up high to the skies. And what do you guys see? Whenever you want to make a wish, yeah, you see a shooting star, right? Whenever you see a shooting star, you make a wish. And here, for shooting stars, it implies that the bulls tried very, 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 very hard to push it super high upwards, but instead they got rejected and it simply just got shot down. And because it got shot down, the next day it implies that the market psychology says, hey, the bulls tried, the bears have pretty much taken over, so now we're going to make sure that it's going to keep going downwards. So it implies that the momentum is carried over from the previous day. So we keep looking at these wicks to see what kind of pattern we can get, and we try to read the price action. Once we read these price action enough, they will tell a story, guys, okay? Like here, for example, right? We see a story being told where it's actually coming down. We see a little wick of a rejection, so it's almost close, right? With the volume. This one here, we see a wick as well, right? And this one here, we finally get a doji candle. And because we finally got a doji candle, it would have been a very nice signal to go long, actually, especially with these series of wicks. So if you went into a long position there, right? You would have entered into a long position when that candle formed right around here. You would have set your stop loss slightly below that candle, and you would have targeted roughly the high of that candle, and you would have had yourself a beautiful risk to reward ratio of about 6.54. Now take a look at this series right here, guys. This series right here, do you guys remember what this looks like? It looks like a hanging man candle, right? It looks like a hanging man candle because there's a bull trend, bull, up, right? But here we get a more so indecision candle, but I would see it as a hanging man. It would be more bearish if it was actually red, but that's okay. A green can still be considered bearish. So make sure that you guys are not thinking that, oh, it's a green candle, it's going to be bullish. Oh, it's a red candle, it's going to be a bearish candle. No, guys, it is not like that at all. A green candle can be very bearish depending on the position that it's in. For example, example, if you saw this candle right here, this green candle on a downtrend, you would think that you would find heavy support. But if you find this candle right here on an uptrend, then you can easily know that because it's on an uptrend, that the bulls have given up almost, right? They're starting to lose their steam. And that's what candlestick and price action analysis actually lets you do. It gives you a really good gauge of just the general sentiment in the market at that specific time. It doesn't always mean that they're losing the battle, but it does mean that steam is actually starting to get lost, right? So this candle right here, the bulls have lost almost because the bears have tried to push it down. They tried to push it down, but they excuse me, I hiccup there. They defended and the bulls pushed it back up. But the next candle right here, what we see is we see like a shooting star type candle, right? And because we see these two candle formations where the bulls were starting to lose steam, and then the bears actually are starting to take over because the bulls tried to push it up. We got this nasty red doji / shooting star type candle, right? So it implies that the bulls tried. The bulls pretty much lost here after they tried. So the next few days, that's why we saw this very large downtrend, okay? So if we keep going right here, right, we go down, right? This one looked like it was going to go up, right? This one looked like it was going to go up. This one looks kind of bullish, right? But it really didn't really get anywhere. So we also have to understand that it doesn't always guarantee, guys, okay? It doesn't always guarantee that we are actually going to see an uptrend when something like that happens, right? It just shows that sometimes it's going to tell a story and it'll give us a general market sentiment, but not always is it going to be guaranteed because sometimes, we see this as a strategy game, right? And as a strategy game, a lot of players will play against each other. So this one here looked like a bearish engulfing, or sorry, a bullish engulfing candle with a tweezer bottom, right? Or even a spinning top. But because it actually didn't get anywhere, hey, you might have taken a chance there. You might have got stopped out and broke even. This one as well, right? It looks like it's going to support, almost supported, but it didn't really get anywhere the next day, right? But this candle, for example, is a nice hammer candle and with a really long wick, right? So because it has a really nice long wick and it actually has lots of volume, it was very easy to tell as well that it was going to uptrend eventually, right? So if you guys look at this region right here, we see it trending in this region for a really long time with a lot of wicks, right? Near the 6,500 range. And that alone was actually very indicative, in my opinion, that it was eventually going to go on an uptrend, right? So we see lots of wicks and downside, lots of wicks. So these wicks are basically indicating support. And especially when we got these two wicks right here, guys, okay? These two wicks right here, they give us a really good clue to tell us that there's two rejections over 2 days to the downside. So the next few days, it's definitely going to go on an uptrend, right? So let's take a look at some other candles right here, for example. This one started to get just 3 days ago, on actually, sorry, May the 3rd here, we ended up getting a bearish hanging man candle, right? We got a hanging man candle, which was starting to imply already that the bulls were starting to lose steam. But the bulls said, you know what? We're actually going to try a little bit. We're going to try to push it up, push it up, push it up, right? And the bulls definitely did a great job. But the next day, the bulls tried to push it up again, and they failed, okay? They completely failed, unfortunately. And because they failed, we ended up getting this double tweezer formation at the top, which is basically two wicks, right? So with two wicks, guys, whenever we see them, we always have to think of it as very bearish and rejection. And surely enough, after yesterday's candle formed, we're now getting this massive candle on the downtrend. So we're going to keep going over a lot more of this in other videos to come, and you guys are going to familiarize yourself with a lot of this, okay guys? I assure you that there's going to be lots and lots and lots of practice down the road. So I think that we're going to conclude the lesson here. tons of examples. I don't want to overwhelm you guys with material. I think we might have gone over almost an hour already for this particular video, and we're going to go through tons of these lessons because I want to make sure that you guys are actually very comfortable with everything that I'm talking about. So thank you very much, guys, for joining me for this lesson. So in this lesson, we covered basically how to read charts, right, from a candlestick analysis type. We also talked about price action as well. The candlesticks, they actually dictate, well, not dictate, but they tell us a story about the price action and what's happening in the market at that specific time. And when we learn how to read candlesticks a lot better and also read the price action, when we combine it with things like level 2, for example, when we combine it with things like RSI and MACD as well, it'll actually increase the chances of us being having a higher probability of being successful, right? So we want to find more reasons to take a trade, right? And this is called confluence once again, right? See, I'm just going to spell it out for you guys. Confluence right over here. If you guys see, I'm going to highlight it. Confluence, okay? I know it's a word that's not used a lot, but confluence, when we try to find, hey, the candlestick is actually showing us that, for example, it might find support. Hey, RSI is actually bullishly diverging right now. Hey, MACD histogram is ticking up right now. Wow. Hey, level 2 is showing a lot more people interested in buying. Hey, volume as well is showing people buying. So you're finding tons and tons and tons of these reasons to enter a trade. And because you're finding tons of these reasons, well, it's a really good sign. Then you would actually have more confluence. So you would want to enter the trade. And as you actually enter the trade, you have also a higher probability of winning it simply because you're finding more confluence. So with higher probability trades that you're taking, it's going to increase your chances of just winning well more down the road. So I had a lot of fun talking to you guys about lesson number 8 over here. We are almost done. If you guys get to level 17, that is the big one. Okay, guys? Lesson 17 will have so many examples of using my specific strategy and what I do. And it will have about 20 live trades for you guys. 3/4 of them will be going long and 1/4 of them will be going short. Okay. So when you guys actually get through all of these lessons, you're going to have a lot of experience under your belt. You're going to have a lot of information under your belt as well. And you're going to know exactly what I'm talking about when I live trade. And you guys can watch the magic happen. So thank you very much for joining me for lesson 8. I had a wonderful time talking to you guys about charts, talking about analyzing candlesticks, talking about price action. And I really look forward to talking about lesson 9 with you guys, which will be about the big picture and the little picture and how to interpret time frames. So have yourselves a wonderful day. Thank you very much for joining me in this particular lesson, students. Make sure you guys are posting tons of questions, okay? Post tons of questions. Make sure you guys reach out to me on Udemy. We're going to be able to tackle a lot of these questions that you guys have because I want to make sure that you guys are getting your dollar's worth. So have yourself a great day, and thank you very much for joining me on this lovely afternoon. I hope you guys have taken a lot away from this video, and more importantly, I hope you've had a very fun time learning as well. May you guys always stay profitable. Take care now. Bye.